because again, but that happens to be because in my head, I was like, yeah, I'm going to get prepared for when it goes down. Doesn't mean I have any sort of special crystal ball, but obviously understanding the mechanics of the market was very helpful in that process. So anyway, one thing I can mention to you, and I mentioned this on my podcast, which is called Dr. Boyce Daily Stock Market on Spotify. You can go look it up. I talked about stock options and how understanding stock options and how they work can really benefit you when it comes to dealing with and taking advantage of this kind of market volatility. So if you'd like to join us in our stock market training, we're doing one tonight. It's called COIN, Certified Options Investors Network. It's 12 straight weeks. I'm the teacher. The class sizes are kept deliberately small. It's very exclusive, very private. You can talk to me directly. And by the time you're done, you get a certificate of completion once you complete the course, and you can share it with your whole family. So feel free to go to drboycecoin.com, drboycecoin.com. All right. Did they bet on a bear market? I think the question is, when you say they, the question is who? Powerful. It's a matter powerful the God. It's like Charlemagne the God. Anyway, so power. So I'm gonna call you PDG. So PDG basically, it depends on who you're talking about. Some people bet on a bear market, but I don't know if everybody did. I don't think a lot of business owners like this economy. I think that they're very concerned because think about it. They're buying stuff from overseas. I saw a report that said Amazon was going to slow up its purchases from China because of the tariffs. That's big. Amazon and a lot of companies are doing this. So what's happening now is they are collecting what they call soft data to prepare for the release of the hard data. The hard data is going to be the actual statistics that tell us that the jobs numbers are off, or the stats that tell us that GDP is down. That's coming. That's coming. That's most likely coming. Right now, the soft data says, well, we were talking to a bunch of manufacturing directors, and they all said that they're going to slow down their shipments. Or we went down to the ports and found out that at the docks, people are concerned. They're leaving. They're abandoning their shipments because the tariffs are too high. Right. So that's the soft data. Those are just conversations, anecdotal evidence, and I believe them. The people in the big banks, Goldman Sachs, Citigroup, stuff like that, they're kind of saying, be careful with this market. And if you're in it, be in it for the long term, and don't assume that because you bought the dip that you're going to benefit from buying the dip in the next 6 weeks, or that you're going to see the results next Tuesday. You might really feel like you made the worst investment in the world, and that might be a time for you to hold your nose and walk away and just look in the other direction and wait for your investments to show the long-term potential. In fact, that's really probably the biggest part of it is that a lot of times we get so caught up in what happened today and what happened this week. I just think that's just bad thinking. I would think of it like if you buy this an item, like let's say that this is my book, The 10 Commandments of Black Economic Power, by the way. I think it's a great book. It's an Amazon bestseller in the public finance category. It's the #1 bestseller. So thank you for supporting the book. Anyway, if I buy this book and if this book has a market price attached to it, let's say right now the market price of the book is $12.20, and I buy 10 of these books and it costs me $122. So I have an asset that's worth $122, right? You follow me? And then let's say that the market value of the book drops by 5%. And so the value of my books drops by 5%. I still have the same number of books. I still have the same asset. It just has a lower paper value. So if you buy stock and you just hold it, then if the price goes down, that means you still have the same asset. It's just worth a little bit less right now. It doesn't mean it's worth a little bit less in general, or that it's fundamentally worth less. Fundamentals are very different from what you'll see in the market price.